Hello, and welcome to Must Read Research on B of A Global Research Unlocked. In this podcast, we offer quick summaries from the prior week's most interesting and impactful research. I'm Candace Browning, Head of Global Research at B of A Securities, and we're recording this episode on Monday, July 13th, 2026. Railroads opened new frontiers for commerce. SpaceX rockets are doing the same for the space economy. This week, we feature this provider of new infrastructure, a wireless carrier positioned on the right side of the low Earth orbit broadband buildout, and discuss AI winners beyond the US and China. Meanwhile, Europe's earnings revisions and the RIC highlight a broadening recovery and opportunities beyond crowded index leaders and AI. So let's begin with the rapid expansion of the space economy and the infrastructure supporting it. The race to expand access to space is accelerating, driven by growing demand for launch services, satellite connectivity, and emerging computing applications. SpaceX has completed more than 650 launches with a mission success rate above 99%. And today carries more than 80% of global mass to orbit. A key focus for SpaceX is the development of fully reusable launch systems, which could significantly reduce the cost of accessing space and support a wide range of future applications, from next-generation satellite networks to orbital computing. At the same time, advances in satellite connectivity are reshaping the telecommunications landscape. So, will SpaceX and Starlink completely take over telecommunications? Probably not. Those terrestrial networks, such as T-Mobile, with strong positions in densely populated markets, may be just fine, as satellites are less effective in urban areas, and those carriers also have some pricing flexibility. From space infrastructure to digital infrastructure, let's turn to the global race to capture the benefits of AI. In a report titled AI Matters, our global economics team looked beyond the US and China for the next AI winners. Using two country-level frameworks to measure near-term build-out exposure and long-term productivity gain potential, we identified South Korea as the standout contender because it combines semiconductor leadership, rapid AI diffusion, strong policy support, and labor market adaptability. But the surprise all-rounder is the UAE, backed by sovereign investment, abundant energy, and the highest AI adoption rate among working-age adults in the world, 70% versus just 31% in the US. Taiwan, Australia, and Japan also look well-placed for the AI build-out phase, though it is less clear how much of that will translate into long-term productivity gains. India shows the opposite pattern, stronger long-term potential than short-term build-out exposure, and it is already the largest adoption market for ChatGPT, Gemini, and Perplexity. From AI adoption around the world, let's shift to Europe, where earnings momentum is showing signs of a broader recovery. Europe's earnings cycle is finally turning. For the first time in roughly 3 years, all one-month earnings revision ratios have turned positive, a setup that has historically coincided with MSCI Europe gains of up to 12% over the next year. Germany and technology are driving the upgrade momentum, while the UK and companies with greater US exposure have lagged. Consensus expects Stoxx 600 earnings growth to accelerate in the second quarter, helped by stronger energy profits from the Q2 oil spike and a recovery in cyclical sectors after an extended period of weakness. That said, some of this may already be priced into the market, as earnings and margins are at record levels, expectations are high, and euro area economic surprises imply a 47% EPS beat ratio. Finally, let's broaden out from regional markets to portfolio positioning, where the Research Investment Committee sees opportunities beyond some of the market's most crowded trades. The Research Investment Committee argues investors should focus on value, quality, and real assets rather than the market's most crowded trade, like AI. Our proprietary indicators point to a strengthening industrial cycle, with hard economic data at its strongest level since 2022 and earnings revisions ratios improving globally. Meanwhile, the AI CapEx boom is eroding cash generation. Hyperscalers have spent $234 billion this year. Their stocks are up only 0.5%. And forward free cash flow for this group is expected to turn negative for the first time since at least 2007. Against that backdrop, many overlooked areas offer materially better value. Gold miners, for example, boast 12% earnings yields, the highest of any sector and the cheapest relative to the S&P 500 in 2 decades. LATAM and small cap value stocks also screen well. With U.S. households' cash balances still 33% above pre-COVID trend, the committee sees a scope for continued broadening beyond mega cap tech. So from the expanding space economy to the global search for AI winners to improving earnings momentum in Europe, and opportunities beyond crowded market leadership. Those are the themes shaping the conversation this week. Thanks for listening, and we'll be back next week.
Bank of America and B of A Securities are the marketing names for the global banking businesses and global markets businesses, which includes B of A Global Research of Bank of America Corporation. Lending, derivatives, and other commercial banking activities are performed globally by banking affiliates of Bank of America Corporation, including Bank of America N.A., member FDIC. Securities, trading, research, strategic advisory, and other investment banking and markets activities are performed globally by affiliates of Bank of America Corporation, including in the United States B of A Securities, Inc., a registered broker-dealer and member of FINRA and SIPC, and in other jurisdictions by locally registered entities. Copyright 2026 Bank of America Corporation, all rights reserved.